I'm Scott Shuttleworth from Montgomery Investment Management, and welcome to this week's Video Insight. As many of our readers and viewers would know, REA Group has been a core holding in the Montgomery domestic and global portfolios for quite some time. The share price of REA Group has enjoyed a strong run, having risen from $47 per share back in November of 2016 to $66 today, and we've been delighted by the returns this has produced for our investors. There were several catalysts for this move, the first being that the real estate listing numbers in Sydney and Melbourne began to improve relative to their downward trend at the end of last year. The second being an increase in the volume of Premier ads on the realestate.com website on the back of the announcement that the company would reopen its Premier All program to real estate agents who missed out last time when it was open. For reference, the Premier All plan is a contract between REA Group and the real estate agents, or a group of agents, which allows them to receive a discount for listing all their ads as in the Premier category on the realestate.com.au website. Finally, anticipated price rises for the realestate.com.au listings are further added to investors' enthusiasm. Recognising that the shares were cheap back in November, we added to our holdings. However, we know that a lot of the mispricing we saw beforehand has now diminished. Nonetheless, we still see bright prospects for REA Group. The typical marketing budget that property vendors will pay is between $5,000 and $15,000, and in some cases much higher depending on the value of the property. And note, this is pre-agent fees. Looking to the future, we expect REA Group to take a bigger share of this marketing budget over time because its listing product is so integral to the marketing effort for most vendors in Australia. Now, the marginal cost of every listing is quite low, and hence a large part of this revenue growth for each listing falls straight through to the bottom line, which is beneficial for investors. REA also has several overseas assets, including a stake in a joint venture in the US with a real estate listing company there, a stake in several Indian property listing websites, and it outright owns several leading property listing portals in Asia. It's tricky to ascertain the value of these assets. However, the upside, if any of them were to be as successful as realestate.com.au, would be considerable. Every investment is not without risk, and of course, REA Group's profitability is somewhat tied to the health of the Australian property market. Whilst we are mindful of this risk, we have always looked to the upside in REA to be worth taking this risk. This continues to be our view to this day. That's all for this week. Please follow us on Facebook or Twitter.